Good morning, everyone. It's Thursday, October 13th. Going to take a look at the morning charts here. We've got the US dollar index. This is the 60-minute chart zooming back about 2 months. And you can see we've had that breakdown in the last weekend or so, and prices have just been slowly kind of stair-stepping their way down. Now, the one thing I pointed out yesterday was that we're coming into a key support zone, which is a previous cluster and breakout area. And the fact that the US dollar has had a pretty strong move down in one direction here, in my opinion, I think we're getting a little bit oversold and we're ready for a little bit of a bounce. Now, this morning we're starting to see a little bit of a bounce, but what I'd like to see is a bounce that comes somewhere up to around the 78.25, 78.50 area, and then from there continue its sharp descent. So if we can get this bounce in the next 2 or 3 sessions, then we're likely going to see a bit of a pullback in equities and commodities, and we'll be looking to most likely take a long position in equities and commodities, and possibly even a short position in the US dollar somewhere up here. So that, we're just kind of waiting for that to play out, but overall the US dollar index has broken a pretty strong downtrend which we had drawn in here, and it has yet to really go back and test this breakout area. And that's what I'd like to see, is a nice dead cat bounce or a nice drift back up to that level, and then see it more or less roll back over. So taking a look at crude oil this morning, how it's played into the US dollar. You can see over the last couple, the past session, we've seen crude oil prices pull back off their highs. There's a couple reasons for that. The US dollar is getting oversold on a short-term basis, and it's trying to put in a little bit of a bounce. And also we are at a midway point through a lot of congestion back here. And of course we have a breakdown point, which is right here, and a consolidation, which is the high that we just came up to test. So if we see a rising US dollar for another couple sessions, we might see crude oil work its way back down into this level here, which will be right through the middle of this noise. And we'll be looking for a possible long entry for higher prices going forward. But it really depends on how everything plays out. Uh, it would be good if it pulls back down here, but if it pulls back on extremely high volume and we see the US dollar actually start to show signs of possibly putting in a bottom and bouncing or starting a small rally, then we may not want to actually take a long position as stocks and commodities pull back. So again, what we're looking for is a pullback in stocks and commodities, and we want to make sure everything is showing signs that that it's more or less a healthy pullback after an extended run to the upside before we go long. If we see distribution selling and other investments do not look like they're actually going to put in a bounce or start to rally here, then we don't want to take a position. So we just have to play it by ear. That's what we're looking for, as a pullback, but it depends on how prices get there, and at the time we will reanalyze. Now looking at the gold chart, this is 4 hours, zooming back about 3 months. Overall, we still have a bearish pattern on a short-term basis. We've got this kind of rising wedge here, and the prices have been rising on declining volume, not the strongest sign. So we're going to see how that plays out. Overall, I'm still bearish on gold at the moment. I'm neutral to bearish, and if we do get that pop in the US dollar, we could see the US gold come back down to these near lows, or at least to the possible 1600 area, which is where we have these three pivot lows over here. So that's kind of where we're keeping our eye. And gold has pulled back a little bit this morning. If I was to just zoom in a little bit, you can see this morning we're seeing gold pull back just a little bit, but overall it's been trying to squeeze its way higher, making a new high each day, and then selling back down. But that is happening on lighter and lighter volume, not a bullish sign. Looking at the silver chart, it's doing much the same, pretty much identical to gold, trading within its range, and it just continues to work its way uh, higher into this resistance zone, and overall volume is declining. So we could see another pullback down to the 29-28 area, which will be a pretty key support zone, and we could see it continue to chop in this range for some time, or we might actually see it actually dip down and continue lower still. So overall, I am neutral to bearish on both gold and silver, and I just don't want to get involved in them right now. They're both trading in the upper part of their range. So by buying here, you're literally buying at resistance without any real volume behind it to support it. And that means if resistance holds, we're going to see the price come back down to the 29 level, which is a substantial drop in value. Now taking a look at bonds, here is the bond price. Let me just change the symbol here. Here's the TLT ETF for bonds. We can see they broke down pretty nicely yesterday. And let me just pull up a trend line. We had a pretty steep breakdown. It's now going into an oversold condition where it's moved so much in such a short period of time that is ready to recoil and move back up. I wouldn't be surprised if we get a bounce up into this area, which will be more or less into this underneath this resistance trend line, and it'll also be through these topping patterns here. So we're going to see how things play out overall. We might be looking for a nice short position as now that it's broken down. We're looking for just a fade back up to possibly take a short position. And if we see bonds continue to fall down, which there's huge potential for them to actually money to move out of bonds and go into stocks, then we're going to see a huge opportunity in shorting bonds using the TBT fund and also going along the equities market. Now taking a look at the SP 500 ETF just to show you where we stand. We've had a huge rally in the past few trading sessions. It's just the market has been so oversold and trending down that really we had a nice short covering rally the first couple days, and then it started to get toppy and became overbought, and we had a resistance zone here which it hit, it gapped above it and sold down, but unfortunately there was more buying momentum stepping in, and we've seen it push to the next level. So if we zoom out, we'll be able to see the next key resistance level, which actually on the SPY ETF it doesn't show up. It shows up on the futures. SPY doesn't quite move the same as the futures, but it's fairly close. Anyways, what I want to show here is that simply we are trading into all these previous highs here. There's been an extended run to the upside, and we're likely going to see some choppy action up here. Likely see a pullback, and it'll be this pullback, a sharp pullback, something similar to this probably, where we're going to see a big sharp drop. You can see after any of these runs you get these big gaps and runs to the downside. I wouldn't be surprised if we see that, but depending how it gets there, we may actually be looking for a long entry simply because there has been a nice upward thrust. We have broken a pivot high, another pivot high here, and the fact that we've broken two highs, and I'm looking for about a 38 to 50% retracement of this current move, meaning if we just pull out a Fibonacci retracement tool, we can quickly see here by grabbing that, be looking for a pullback down into this 38 zone and this 50% zone. So if we can get a move back down into this range, we'll be actually looking to possibly take a long position. And simply because we'll be above we'll be at these key support zones where we've had congestion, and that'll act as support as we settle down on top of it, and then likely see the market pick back up and continue to run higher. And again, this pullback in the equities market, that would help because we're at resistance, but also because the US dollar is ready to put in a bounce. So as the US dollar goes up in value, we're going to see equities pull back a bit, and then I think once the dollar hits resistance and starts to top out again and head lower, then we're going to actually see the equities market should be sitting down in the support zone, and it will start to move higher for possibly another big run to the upside. Looking at the futures chart this morning of the SP 500, we have the 10-minute chart. I'm just zoomed out one trading session here. Now this is a 24-hour chart, meaning this heavy volume that you see down here are the regular trading hours, which is 9:30 to 4 Eastern time. So this is what happened yesterday. We saw a nice move up throughout the session, a steady grind higher, and then we saw some strong selling kicking into the close. Now with futures, we saw the equities market close about here yesterday, and right now we're trading down about 1%. So we're going to see a gap to the downside, and we'll see if that has any more momentum behind it for another day or two, and then from there we could be looking for a long entry. So we'll have to see how things play out, and we'll just take it one step at a time. Anyways, that's it for now, and I'll talk to you later. Bye bye.